Good afternoon, everyone. This is Michael Venezia, the head of the Equity Trading Division here at Tradeview Markets. This is our webcast for Friday, January 30th of 2015. As always, I'd like to thank everybody for joining us. This is the heart of the earnings season right now in the equity markets, and there's a lot of geopolitical news out there. The market is somewhat range-bound. There's tremendous amount of volatility, and with that being said, I can never stress more to our traders that less is more. Even though there's a ton of things to do, I find that traders get very distracted by all the action and miss a lot of good quality, meaty trades where they can get in with some size. What I'd like to do is reverberate back to January 27th and 28th, which is Tuesday and Wednesday respectively, Wednesday being the day when Apple Computer came out with earnings. Now, I'm going to give you 3 examples of stocks that day that had range, volume, and material news, all different circumstances, but how I showed and played against relative strength versus the SPYs. Now, what I would like to do is go back to the SPY chart on the 27th, which is Tuesday, as it continues into January 28th. Now, here you see right here, January 27th, these are the SPYs right here. The market in general. The market was down big gap down. The market was down 400 points at one point, retraced to about 200. Then here we have the next day. The futures are being bolstered up. It could be by Boeing. It could be by Apple. But this is the close on 27th, the open on the 28th. And when the market is weak the previous day, what I like to do is fade weak stocks and look for stocks that are strong with relative strength. I want everybody to keep in mind when going back to the chart that the SPYs did go negative right here and broke low in the morning session at 11:30. Keep that in mind. The SPYs broke low at 11:30. So I'm going to go back to PPC, Pilgrim's Pride. Once again, the market opened up strong. Keep that in mind, please. PPC closed at $37 and had material news. The futures were opening up precipitously. The stock opened at $31.20, down $7. And as you see, the stock went from $31.40 right to 28. Now, I'm not going to say I captured 3 points. I didn't. I covered right around here. But as you can see, when the market is opening up nicely and you have a stock opening down nicely, especially with material news, that's definitely worth a short. This happened to be a decent trade. I did revisit it a couple of times here, but the meat was out of it, and I moved on. Now, let me go to something else. Let me go to Boeing, who had earnings that Wednesday morning as well. Now, Boeing, before the earnings, when we go to a one-year chart, was trading at a year high. So right there, you'll know that Boeing was showing relative strength and acted well into the numbers. Now, once again, let me go back to the spider chart that Tuesday and Wednesday. Once again, the futures open up big. The market is breaking low at 11:30. Now, at 11:30, you have Boeing, who closed at 132.50, opened up at 136.50. Very strong on good volume. Now right here is 11:30. The SPYs in the Dow, Boeing being a Dow stock, was breaking low at 11:30. So you buy Boeing at 138, showing huge relative strength and very nice volume. You buy the stock around here. I'm not saying you sell the top, but you definitely have a nice dollar trade. And Boeing throughout the day, by the way, on any dip in the market, showed relative strength, so that's definitely one I would look to revisit and be in. Boeing at a year high, closing well up 8% on the day. But let me go to the last one, and it's complete opposite, actually. Let me go to U.S. Steel. Obviously, U.S. Steel is self-explanatory. Commodity play, steel play, been very weak with the strong dollar. Let's look at the yearly chart on U.S. Steel. Basically on year lows, but let's go to steel. Look at the volume today. Now, once again, going back to the SPYs, the previous day and today. The futures open up strong. 11:30, the market's breaking low. U.S. Steel acting very well. Still, if it was right here at 22.65 after a pullback when the SPYs did, still up $2 and change on the day. Now here you go at 11:30, right again. The market's breaking low. We take a position in relative strength on U.S. Steel, which is still up $2 for the day. We buy it around here, 23.45. Sell it around here somewhere at 24.35. Now, it doesn't seem like a lot, but it's a good percentage play. So this is a good example about how I did my research on what the analysts thought. The U.S. Steel quarter was so bad that the analysts thought that everything was priced into the stock, and it certainly acted that way based upon relative strength. So I want everybody to understand that some of them work, some don't. I could have used an example one didn't work, but based upon the fundamentals and my criteria for entering a stock on range, price action, and volume, these are high percentage trades, and you got to be in them. So please go over what I said. Go over stocks that happen. Paper trade, if you will. Write down what the action is. You have to be in them, please. Once again, I'm going to have more stocks continuing from earnings from next week and our next webcast, but these are a couple of great examples. I want everybody to do their homework until then. So please trade well, isolate your positions, and be prudent. Thank you again.